What's good, everybody? My name is Coin Junior. Welcome back, and it's good to be back. It's been quite some time since I updated the channel with a new video, so here it goes. All right, so the major news today that's been going on is that the Federal Reserve has raised 0.25% interest rate, and that is the reason why Bitcoin and the other cryptocurrency is pumping right now. All right, you can see we're currently in the green, major pump to the upside, breaking through the $24,000 range. It's been a great news. A lot of people are calling for the bull run. The bear run is over, but here I'm gonna remain optimistic and rational at the same time, because I don't want to get caught in a hype. All right, I don't want to listen to others. This is based on my own research and my analysis based on the current market movement. Okay, obviously it's fun. It's great to see Bitcoin and other cryptocurrency on track to hit a major bull run going forward. So let's just dive into the reason why I am not going to be overly excited. I'm going to remain rational, but I'm going to be accumulating slowly, steadily, and not just go all in into the cryptocurrency market now. Okay, so as we all know, the Federal Reserve raised the target range for the Fed funds rate by 25 basis points to 4.5% to 4.75%. Okay, dialing back the size of the increase for a second straight meeting, but still pushing borrowing costs to the highest since 2007. The decision came in line with market expectations. Okay, so because of the cooling inflation, the Federal Reserve decides to slow down on the interest rate hikes. Okay, so they only hike 0.25%. Okay, so you can see right here the current interest rate in the United States is 4.75%. Okay, which is in the expectation of the public. Okay, a lot of the people are expecting a dovish increase, which is true, but you can see the inflation rate is still soaring. Okay, it's not soaring as like the previous percentages, like 7.1. So currently the inflation rate is 6.5%. Okay, so we still have to wait for the report on the January inflation rate, okay, which is coming out in 3 weeks time, if I'm not mistaken. Okay, so it is a good sign to see the Federal Reserve being dovish. However, Jerome Powell, okay, he retained its pledge to have ongoing increases in rates, which seems to confirm plans in a December dot plot to hike by an additional quarter point in both March and May. Jerome Powell, in his press conference, all but ratified that as the current plan, saying it would take a couple more hikes to get to an appropriately restrictive policy. The committee could conclude that the disinflationary process has started, supply chain improvements are helping in the goods sector, and new leases point to eventual improvement in housing inflation. The big focus remains on the services sector, excluding housing, where a very tight labor market may influence prices. Right? So currently the inflation is improving, but it's still there. Okay, so the target inflation rate that the Fed is trying to bring down is towards 2%. Okay, 2% is the target inflation rate that the Fed wants, but currently, okay, we're at 6.5%. So we still have a long way to go before the market can fully recover or at a comfortable position to recover. Okay, so we still have to expect more hikes coming in for the Federal Reserve in the coming months. Okay, and that is reason number one why I am still cautiously excited. I'm not overly excited, I'm just cautiously. I'm gonna be paying attention to the markets. Okay, I'm not just gonna ape completely into it. Okay, and the second reason why, it's because of shady shit like Alameda Research and FTX still looming in the cryptocurrency market. Look at this. This is just released. Okay, Alameda Research wallet receives $6 million from Bitfinex hot wallet. They receive over $10 million in stablecoins overnight, but the reason is still unclear. Okay, an Ethereum wallet that belongs to bankrupt trading firm Alameda Research quietly received $6 million worth of Tether USDT from Bitfinex hot wallet overnight. The wallet also received $4.5 million worth of USDC from an unknown entity, as it appears to be consolidating assets in line with bankruptcy proceedings, bringing a total to $10.5 million in the last 24 hours. The wallet which has received several transactions from another Alameda Research address since its creation 31 days ago, now holds $183 million in various altcoins and $26 million in Ether. The largest holding is $54 million worth of BitDAO tokens. So, theoretically speaking, you can call this a conspiracy theory. For me, the reason why I'm still dovish, okay, it is because we never know what Alameda Research might do. Okay, they might dump tokens. You never know this, and we still have the entire Grayscale and Gemini and Genesis thing going on, but we're not going to touch about that. But Alameda Research has been quietly receiving a lot of money from Bitfinex and from, unknown entities. So a lot of shady shit is still going on in the cryptocurrency market. I wouldn't even be surprised if they tank the entire market again. I wouldn't even be surprised. Okay, so we have to track what is the current trend and the current movement of all these shady companies. What are they doing? Okay, and that is the main reason why I am still cautious. Okay, another one, Ethereum's Shanghai upgrade is coming, but it doesn't mean investors should dump Ethereum. Ethereum's Shanghai upgrade is tentatively set for March, which means approximately 40% of Ethereum supply will unlock in the year ahead. Okay, so this is a great article. It shows both sides of the coin. Okay, and this is why I want to cover this article is because I have the same mentality as them, because I am in the middle. I am not excited, I'm not overly excited, and I'm not overly bearish at the same time. We still have to evaluate what is going on forward. Okay, the Shanghai hard fork will implement further improvement proposals for the Ethereum network, as well as enable Ether stakers and validators to withdraw their assets from the Beacon chain. Staked Ethereum represents approximately 14% of the total supply, or 16 million coins. It equates to over 25 billion with a B dollars at ETH's current price, a substantial sum that will gradually become liquid following the fork. Okay, so why I'm scared of this is because a lot of the people will be looking for liquidity if the Federal Reserve decides to hike up interest rate to the point that is sending the US economy down to a recession. A lot of the people will be looking for cash, and that's why once they get their hands on their staked Ethereum, they might be cashing out. Okay, that is one of the main reasons why I think this way. But there's another side of the story, which means liquidity attracts stakers. Most investors were originally reluctant to stake ETH when it became available, because doing so required locking up their funds for an undetermined period of time. Staking ETH required a minimum of 32 ETH, meaning that when ETH2 launched in December 2020, the price of entry was around $19,000. Alright? However, the Shanghai update will remove this uncertainty, and token holders will be allowed to withdraw their staked assets. Okay? And once they withdraw, they have the chance, okay, they have the option to go for liquid staking. It is a concept that democratizes Ethereum staking for investors who can stake as little as 0.01 ETH. Staking small amounts of Ether is possible when investors exchange their ETH for derivative tokens, which are backed 1-to-1 and represent the amount of Ether staked in a pool. To simplify this, once you stake your Ether, they will give you another token in return, and you can use that token to stake or use it somewhere else. So you will get the freedom of using your tokens, which is backed 1-by-1 with the same price as Ether currently. Okay, so this is the reason why a lot of the people are still in the middle, like, okay, there's rise of liquid staking, so I don't want to stake on Ethereum anymore. I want to be able to access my funds. Why not just go to liquid staking? Okay, the capital efficiency of liquid staking is one of its main advantages for investors, sometimes referred to as liquid staking derivatives (LSD). It gives you the freedom to enter and exit the market at will. Okay, so there's two scenarios here. Once the staking withdrawal is unlocked, some people might take Ethereum and dump it, cash out. But some people might see this as an opportunity to get more money by staking it. There's two sides of the coin. And this is why it's highly correlated to the FOMC decision. If they continue to hike rates, which will happen at March, right? And this Shanghai update will happen tentatively at March as well. So what happens if the Fed continues to tighten the monetary policy? A lot of the people will get a hold of their Ethereum, cash it out to make sure they have liquidity to survive the incoming recession. Now, this possibility is around 50-50. We don't know what's going to happen, but that is my take on it. So make of it what you will. This is not investment advice, okay? Don't just short or just go long. This is not investment advice by me. Do your own research, and this is mine, and I'm just sharing my thoughts with you, okay? So please support the channel, subscribe, like, comment. I really appreciate you guys for tuning in to my videos. Please help out the channel. I'm just a small YouTuber trying to grow, and I'm trying to just share what I know, all right? And this is a really beginner-friendly channel. Please recommend it to your friends. You know, just do the things that I say, please, all right? Subscribe, like, comment, and I'm gonna see you guys in the next video. Peace.